For our next panel, the topic is institutional Bitcoin breakthroughs, pensions, brokerage, and Bitcoin native markets. The moderator for this panel is going to be Richard Byworth. He's the managing partner at Bitwise Partners and chairman of Future, Switzerland's leading Bitcoin treasury company. A 25-year investment banking veteran turned into Bitcoin. He is a board member at Relai, advisor at Jan3, and a prominent voice on Bitcoin adoption, capital markets, and treasury strategies. The panelists today are Sam Roberts, Director of Investment Consulting at Cartwright, Leopoldo Moreno, Head of LTP Spain, Guillaume Bajczman, Head of Treasury, Liquidity, Bitcoin, and Flavio Rossetti, the Regional Consultants, Southern Europe at Bitwise. Please give them a warm welcome.
Do you want to say in order? Yeah, so Leopoldo, you're there. Flavio, oh no, sorry, yeah, you're one down. Hi everybody, sorry we're running a little bit behind. Mike's sharing, and Guillaume's just having a cigarette, so he'll be right with us. But I think in the interest of time, we'll kick off. Do you want to? Yeah, thanks. Okay, so just to remind everyone, we're at a Bitcoin conference. You're hearing a lot about shitcoinery while we're here, and I think one of the things that is really important is to keep people on point. Like, there's a lot of people that don't understand Bitcoin. I work in asset management, so to give you just a very quick introduction, I run a fund denominated in Bitcoin that provides investors hedge fund strategies to achieve about 3 to 8% yield on their Bitcoin. And the biggest challenge always is to try and keep people away from the shitcoins because they don't really understand the difference. And if you're promoting that or allowing that to happen, you're essentially robbing people of the opportunity to hold the greatest asset on this planet. And I think a lot of the work that's being done here by everybody on the panel is about educating institutions. And I think that it's really important to just set that scene as we sort of go through the introductions, because everybody here is very focused on Bitcoin, and that's super important in the work that we're doing. So with that, I'd like to ask each of the panel members to say hi. Sam, do you want to kick off, introduce yourself, and maybe just give a quick intro of the work that you're doing with institutions as well to contextualize for everyone?
Sure thing. Hello, everyone. Good to be here in this beautiful city, Madrid, my first time. So, Sam Roberts, Director of Investment Consulting at Cartwright, and that's my primary role, and that's the hat I'll be wearing for this panel, I think, probably, unless I say otherwise. I do have a role as non-executive chairman of XE Connecting Excellence, and for those of you that didn't see Scott's presentation yesterday, I'd highly recommend you find that recording. I also have a pro bono advisory role with the Bitcoin Collective, and they run the Bitcoin Business Network in the UK, getting businesses and charities together that might be just curious or very experienced in this area, and just helping them to talk and learn more. So the role that we play in this industry is that I'm talking about Cartwright, we're advisors, investment advisors. And we advise on all asset classes, including Bitcoin. And what we're really trying to do is help our clients, which are all institutions, companies, charities, foundations, and pensions, corporate pensions. How can they have more resilient asset portfolios or balance sheets, depending on the context? And what is resilient for one is going to be very different to what is resilient for another. And there was a superb presentation yesterday by Arash, who's sitting here at the front. So another presentation, make sure that's on your list of watching. But that went through the process that we would go through to help institutions to make the right decision for them. And maybe just the extra point I'll add is that some people might be thinking, I'm sorry, what? You advise on Bitcoin and you advise on resilient portfolios. How does that make any sense whatsoever with such a volatile asset? And the reality is that it's not right for everyone, but it will be right for some. And they need to go through the process. And I think one of the reasons why Bitcoin is dismissed so quickly by some is that they fail to see how fragile our fiat money system is. And if you see, there were some presentations early on yesterday which went into some detail on that. So I'll pause there.
Thanks, Sam.
Okay, so from my side, I'm the head of Spain for LTP. So LTP is the #1 prime broker in Asia. It did over 1.4 trillion last year in volume. It's not that well known here in Europe, but which is why we're developing from the European side kind of the licensing and processing all that to be able to offer products in Europe. Before that, I built a broker here in Madrid, and we had the license of the Bank of Spain, and we were operating up until MiCA. So yeah, that's kind of my relationship with the institutional side.
Hello, and apologies for being late, sorry. This is how we do it in Argentina, sorry. So I'm Guillaume, I'm head of Treasury, OTC, and Liquidity at Roxxam, and Roxxam TV. Roxxam is the first Bitcoin capital markets, or at least is what we are trying to build. And Roxxam TV is our, let's say, call it Bloomberg TV, the same way they have live news 24/7, we do have the same with same naming, and despite there are two different companies, we work together a lot. Our idea here is to redefine the economy on Bitcoin, saying we had access until now, we've seen a lot of institutional development for the last 5-6 years, but now we are entering on a new yield native Bitcoin era for me, and this is what we are trying to build.
Good morning to everyone. I am Flavio Rossetti. I'm part of the distribution team at Bitwise Asset Management. I'm currently based in the London office. Bitwise is an asset manager, a US asset manager, founded in 2017. Today we have over 11 billions in AUM. And we are moving between the traditional financial services industry as an asset manager and the blockchain industry, actually. So from one side, we create ETFs in the US and ETPs in Europe to give access to crypto investment to every kind of investor, from the institutional to the retail. And at the same time, we are also developing the staking activity. We do it through ETPs, and both with our Bitwise on-chain solution department and Chorus One that take care of the staking activity in-house for Bitwise.
Okay, I think that's a good segue and sort of to connect the dots in the way that I introduced this panel. Obviously, it's a Bitcoin conference, and a lot of the conversation that we have when we're talking to people is about trying to educate them and help them understand the importance of Bitcoin. And I'm interested, Flavio, in your view about this, but my previous fund, well, the fund was previously part of a private bank. And one of the private bankers came to me one day and he's like, hey, would you do the same that you've done for Bitcoin with Ethereum? I said, no. And he said, well, wait, before you say no, I've got a client that's got $50 million of Ethereum. Would you start a fund for him with 50 million? And I said, no. And he couldn't believe it. Like, he just would not understand why I said no. And so what I tried to explain to him is, like, we're here on a singular mission. We're trying to help people understand that Bitcoin is the true asset. And, you know, I had no idea that this would happen, but I think that as a result of that very purist approach, and every time I spoke to an investor, they felt that purist approach, within 2 months, we raised another 250 million into the fund. So we 5x'd the amount of inflows as a result of, not a direct result, of course, of saying no to that 50 million. And I sit on the board of Relai as well. It's on the screen. Relai is a Bitcoin-only broker. And we always get that question, why don't you add Ethereum? Why don't you do this? No. And it's because the team are all Bitcoin purists that they end up just attracting much more money from Bitcoiners. Because the true amount of capital in this space is Bitcoin, right? And so people really want to work with people that truly understand this asset. So I guess the question to you, Flavio, on that point you made is, has there, because I know that there are real Bitcoiners within Bitwise, like Andre, for example, has there been a conversation around moving to being the first truly, I mean, you guys are a real institutional ETF provider, to moving to just, you know what, Bitcoin's the only asset, Bitcoin only, and I would argue that you'll end up getting a lot more AUM as a result of that. Has there been a conversation around it?
Actually, we started to take like the opposite direction, but there is a reason for this. We believe in the blockchain as a tool. So as I said, like obviously Bitwise started as a traditional asset manager, let's say. I mean, I wouldn't say traditional, but like traditional in the way in which we build products. So we started with the ETFs in the US and ETPs in Europe. Mm-hmm. And what we try to do actually is to give access to the entire financial services sector. I mean, we try to give them the opportunity to invest in crypto. We need to remember that at the beginning, investing in crypto was something that you could do basically on exchanges, and retail investors in particular were like the average crypto investor in the majority of the cases. The ETFs and ETPs as an investment vehicle gave us the opportunity to basically give a tool to the investors to gain access to crypto investment. So we started with Bitcoin. That was the most that right now is the most successful ETFs and ETP in terms of AUM, but also the structure of these funds, of these investment vehicles, gave us the opportunity to wrap like strategies like crypto baskets, Bitcoin and gold, staking. I mean, it's possible to like just buying an ETF and do staking. So
I'd say the answer is no then.
The answer is both yes and no.
All right. No. Sam, do you want to talk about how you keep your pensions away from the danger zone?
Yeah, sure. So we come at this very much from a what is money perspective. So I think that's consistent with what a lot of things you'll have heard over the past day and a half so far, and a lot of the conversations you'll have out there in the corridor. So we are coming at it from what are the weaknesses, what are the fragilities in the existing monetary system. We talk about gold, we talk about Bitcoin through that lens. When we're thinking about the altcoins, to give the slightly more diplomatic phrase, we would see them, I mean, there's a spectrum, clearly, but certainly at the better end, you can just view them as technology companies. But the reality is, if you think about how institutions invest, they're very rarely stock picking, and they much prefer to have, if they're buying technology companies, they want to buy big companies that have proved their way, that have got good valuations, at least relative to what else they can get. They're much more likely, frankly, to buy a technology index, track that with Mag 7 plus other technology companies within that are listed with fuller disclosures, than to go down the altcoins route. I think that's one angle. I think the other angle is that the potential to improve the quality of the money, not just from a financial point of view, which is obviously the primary perspective that we have because we're looking at asset portfolios, but also the benefits to society, the environment, and I mean, it's once you get into that, it's absolutely huge, and it's very difficult to look at these altcoins the same ever again.
Leopoldo, what about you in terms of your discussions and keeping people away from the altcoins, as Sam diplomatically put it?
So I completely agree with you. I mean, Bitcoin is the value and is the signal. Everything else is noise. And from the point of view of the institutional global broker, you basically just a provider of the platform for institutions to connect and do whatever they want. So from that side, we don't really, and maybe because of a regulation standpoint, which is probably what we'll get into now, but you just facilitate the tools for each client to decide what they want to do, right? And then the education, I think, goes through time, and then people will learn as they burn. But basically, there's no way in which you can make people, understand Bitcoin, right? Most people understand Bitcoin by not understanding it first, right? So I think the market will self-adjust. As I think there's enough people with enough influence that know what this is about and know what the signal is. So I think, gradually then suddenly, right?
Yeah. Guillaume, you run a Bitcoin-only platform, which is fantastic and hugely innovative with the products that you guys are bringing. As well as talking about some of those products, maybe just tell us, have you had that same painful conversation? Why don't you build it on Ethereum or something like that?
I think Ethereum is not even a discussion in our table. I'm sorry for the ones who love it. We don't use it, we don't do it. We believe on people who's using it, yes, and we think is a reliable asset as well, but our focus was really Bitcoin capital markets and working for the Bitcoin community. Especially this year. This year we've seen, for me, the last year was like the birth of digital credits, and digital credits changed completely the way how we are building this yield on Bitcoin. Sorry, those were my notes. What I see here is way more adoption from institutions that today cannot enter the crypto space. Pension funds, typical places where, because of the risk, departments cannot go into crypto, they will now go into digital credits, which is preferred bonds, and that's something they can use. This is why, for me, this year is the birth of digital credits and also the birth of the real institutionalization of Bitcoin finally. And obviously in Roxham we are really focused on getting that market. We're working with Stretch, with Stripe, with all these bonds to provide it to our customers and generate that yield in Bitcoin, real and especially transparent yield.
Yeah, just to double click on that for a minute, obviously, it's nice to have you and Sam on this panel because obviously Sam's coming from the very other end of the pitch and you're sort of operating, I would imagine today, with a majority of OGs, individuals, family offices maybe. What does your client base look like, and are you starting to already see the beginning of real institutional money using some of your products?
So, yeah, mining companies, Bitcoin treasuries, those are our, I would say, Bitcoin treasuries, it's obvious, is part of the narrative. If you want a Bitcoin treasury and you can get it in Bitcoin, will be way better for them. And also important for Bitcoin treasuries, one of their one of the main issues they had today is the distribution. If you are sitting in a Bitcoin treasury in India and you want to sell your Bitcoin treasury in Japan, you will need to find a broker in Japan that is connected to a broker in India, and that is really not efficient at all. So with Bitcoin, we are removing that layer, and basically every Bitcoin treasury can be accessed from anywhere in Bitcoin. That's why Bitcoin treasuries are interested on first listing in Roxham, and second to participate on the suite of products we are building. And also miners. Miners have and produce Bitcoin. And one big case I was talking a few weeks ago was with American Bitcoin. And these guys really produce Bitcoin. This is the only thing they do. It's not like strategy. They have another core business behind. No. These guys produce Bitcoin and only Bitcoin. And there was a moment they didn't have anywhere else to put those Bitcoins to generate more yield. And also, is that something that since they are producing Bitcoin, they will not go into high risk to get more Bitcoin because at the end they are mining it. So we found in them a place where they can come and put their Bitcoins to work on a safe way. Obviously, you need to trust strategy, you need to trust Stripe, you need to see what's going on the digital credit space, what it means. And they are really our main focus also from our side. We want to work with Bitcoin treasuries, we want to work with mining companies, or with any company that wasn't able to enter crypto, like ETF, allocating Bitcoin like ETF, spot, or even buying stocks of MicroStrategy by swapping to digital credits.
Nice, nice. So let's use that to just pull across the question to everybody around capital flows coming into Bitcoin. I'll start with you, Flavio. So something I learned moving to Europe relatively recently is there's this heartland in middle Italy of just enormous wealth, manufacturing, very private, very conservative money. How is that, you're obviously responsible for Italy, how is that money starting to think about, let's talk about Bitcoin only, please, about Bitcoin in terms of their capital allocations, and are they getting more comfortable with it, or are they still a bit more reticent?
Yeah, so as you said, basically you use the right word, like conservative. Usually Italy as a market is pretty conservative. So the fact that, I mean, you know, we are talking about the traditional portfolio, 60-40, and when you say to someone like so conservative that may be like a retail investor, maybe an institutional or a professional investor, to change his asset allocation to introduce Bitcoin, and obviously Bitcoin is the main way in which we raise asset. I mean, also it's one of our main ETPs, and it's very simple to explain Bitcoin actually from an investment point of view, because we're talking about basically a store of value, we're talking about scarcity, we're talking about also explaining blockchain from a very simple point of view is something that an average investor can get pretty easily. But at the same time, as I said, we are talking about changing the asset allocation, changing the way in which investors do their asset allocations. And culturally, Italy is not always so open to innovation. So it's related to education. So getting in front of people, getting in front of banks, investors, family offices, and explain them why Bitcoin, why they should start to look at Bitcoin as an asset for investment. And yeah, this is the main challenge we're seeing.
Sam, you obviously had a breakthrough in 2024 when you got a pension fund to directly put Bitcoin, rather than even an ETF, put Bitcoin in its portfolio. Like, how has that led to other institutions thinking the same way? Are you able to share maybe what the pipeline looks like in terms of other pensions and institutions coming and playing?
Yeah, I mean, maybe initially I was a bit optimistic. So November 24 was when we announced to the market that this allocation, this 3% allocation had happened, and as you say, on-chain Bitcoin. And that was a big moment. And I think my hope was that then over 2025, all these secret Bitcoiners in all these different companies, you know, our competitors and elsewhere, would suddenly rise up and it'd make it easier for them to have conversations. And I think it did make it easier for them to have conversations, but there were still some quite long conversations to be had, and it would depend on how senior they were within their company as to how quickly they could move things along. So if we take a step back and think about the timing, you know, so it'd probably take 1 to 2 years for an advisor, so a similar firm to us, to get comfortable with Bitcoin from a standing start, but also that would include, you know, identifying how they would get exposure. So that could take easily a couple of years. So that's the end of this year. but then they go to their clients and convince them. So that could be an extra 1 or 2 years. So we might, one view would be, we might be talking about the end of 28 when your average pension scheme has taken that decision either way, and those that have decided to do so have then bought some Bitcoin, put it in their portfolio. However, there's a distribution, of course, underlying that, and there's going to be some early adopters, and so we might start to see some more of them this year, I would hope. But we continue to speak across the industry, continue to try and educate, continue to try and actually help our competitors with their education, with whatever they're trying to do, and if we can club together to produce, we're hoping to put a case study document together, for example, in conjunction with one of our competitors and things like that, then that would all, it all helps. It all moves things in the right direction.
Yeah, Leopoldo, what about yourself?
So we saw from the Bitcoin side, institutional side, even as the price declined over 50%, or around 50%, and a significant increase in interest in OTC transactions, in onboarding institutional clients, specifically interested in Bitcoin allocation, and in the side of asset management as well. So, we feel we're very optimistic, and we do see in the numbers not only kind of blockchain analysis and seeing that more transactions, more users, every adoption as well as the hash rate. You kind of see all the metrics going up besides the price, right? So that along with the institutional interest, and so in Asia we're connected to most banks, most small exchanges, most kind of market makers, traders. So we kind of have a sense of the institutional side, at least from over there, and it makes you very optimistic. See that even as the price goes down, there's even higher and higher interest in Bitcoin.
Guillaume, obviously, you're a Bitcoin-only platform. How much of your team's work is education as well, and bringing even miners to the table to be monetizing their Bitcoin or financializing their Bitcoin in some way?
Yeah, good question. Because we realized this after starting. So we launched back in July 2024. Obviously, the first year was building the platform and creating that atmosphere. Then we went up saying, yeah, okay, we are ready. The platform is there. But we realized that people wasn't maybe ready for saying, hey, I'm going to buy an Apple stock in Bitcoin. And what does it mean? And why shouldn't do it? So our growth team started to work a lot on creating this among the community, saying why and how we should do this. And I think, yes, there is a lot of people that need still to be, I don't like to use educated because I'm not a teacher, but that needs to understand what's going on and why we are doing what we are doing. And for that, all the companies, not only Roxxam, needs to still work a lot. We are on a relatively new ecosystem if you compare to any other money history. It is very young. So I think this is the type of events, MadBitcoin and every event that bring us on stage to talk and to share what we are doing is the way of doing it. But still, we need to work a lot on the why. And this is where I think we are struggling the most. People love the idea. On our case, for example, they say, wow, this is great. But then when they need to go and buy, I don't know, gold BTC on a perpetual swap, you don't see that attraction, or you don't see the usage that you were expecting. That's why we shift to institutional and more Bitcoin treasuries. I think for the retail, we still have a gap, and we need to work on that. Unfortunately, I don't have the solution now. It's more education, and talking and spreading the word. But yeah, definitely the gap and the harm is there. Is on the people understanding what we are doing.
Nice. Let's take it slightly in a different direction. I think one of the biggest innovations that we've seen in this space in the last year has been Saylor with the perpetual preferred equity. And obviously Stretch is now opening a door onto the 300 trillion bond market globally. You talked about 60-40 allocations. Like, you have many of these institutions that understand 60-40. They understand fixed income. But to invest in the fixed income, they have to understand the collateral. Sam, we were talking about this earlier. I mean, Stretch is completely mispriced. Like, actually, it's so cheap. It's so good, such good value to an investor. Every fixed income investor, for even fiduciary responsibility, needs to understand why this is paying so much when the collateral is so big. And so I think it's really opening the door on that huge market of fixed income managers who are the most pessimistic managers in the world. I mean, their whole approach with fixed income is, how am I going to get my money back when you default? Like, that's the question always with a fixed income investor. So this is completely changing the landscape. That collateral basis Bitcoin, it's forcing that 300 trillion of capital to pay attention to this completely mispriced product. So maybe let's just sort of walk across the panel, get everybody's view on how Stretch and Sata from Strive is changing the conversation with your investors. Maybe Sam, you could kick off.
So I agree, it's incredibly innovative. I think for our clients, for institutions, it's actually very difficult to justify buying it. What they're looking for, they'll be zooming in on that. Well, there's company risk associated with that, even if they understand the overall structure of that security. Mm-hmm. So I agree, it's opening the door to the bond market, but it's going to take some time, and for there to be other issuers and so on, and therefore they've got a diversified fund or something like that that they could then start to expose them, or consider whether they should expose themselves to that kind of thing. Mm-hmm. But I think we will see, it's not only opened the door to the bond market, but it's opened the door to innovation in terms of how fixed income can be combined with Bitcoin in some way. And there's going to be situations where that can be done without specific company risk. Maybe there's other situations where it could add to that diversification pool, and that's some of the things that we're looking into without giving too much away.
Nice.
Yeah, from our side, we saw a similar experience. So there wasn't that much interest or appeal for those kind of products, which was interesting. But I think it is yet early, and I think institutional clients typically prefer maybe a more battle-tested kind of product in this new industry. So I think it'll take time, but I think the optionality in having more products, more things that they can directly or indirectly buy Bitcoin, it's very positive for the market. Yeah.
Mm-hmm. I love them. I love digital credits. I think, as I said before, is the new era of Bitcoin yield is led by this type of products. Mm-hmm. As a Bitcoiner, I was waiting for a product like this where and in Roxxon, what we do is we created a carry trade where you put your Bitcoin, we lend you STRC, and you get those dividends paid by month in Bitcoin directly on your account. So it's what I did, and I'm super happy. And since we have Stretch, SATA, STRD, and different assets, we can have a weekly payout in Bitcoin to our customers. I'm coming from the old world where that didn't exist. You were only holding Bitcoin. Made a good effect on us, but now I'm seeing a way of not going into any strategy and having my Bitcoin to work. So I love Stretch, I love SATA. I think the big discussion here is, and I'm pretty sure we all want to hide when people ask us that, is what if Michael Saylor fucked it? So yeah, we don't know. No one here knows, and we are all here hoping that never happened this. We know it's a risk, but we also play with the horse of the Michael Saylor image on the ecosystem. We know that he will not make it bad. Could happen, yes, I'm not saying no, but we trust a lot his products, we trust a lot what he's doing, and obviously in Roxxon we are supporting a lot anything related to digital credits.
Just to pinpoint on that for a second, I mean, we probably need a whole different panel to discuss the ongoing viability
Next time I want a
of
keynote.
strategy. But, you know, obviously it's a NASDAQ-listed company. There are checks and balances all over the place. I think in terms of collateral protection, I think we're pretty comfortable with the way that sits. Flavio, you mentioned the 60/40. Are you seeing these products start to permeate the portfolios of the families and money that you speak to in that Italian region that we talked about?
As I was mentioning before, it's always about, most of the times is about Bitcoin actually, so the first allocation is on Bitcoin. It's very difficult to go beyond it. In some specific cases, we may have some very, let's say, specific investors that get interested in something else, but it's mainly about Bitcoin right now, because I was mentioning it's pretty simple to explain, and people get it pretty well. At the same time, obviously, we also have a research department that helps us a lot with portfolio studies, articles, continuous research, so it facilitates a lot our work. But yeah, it's mainly about Bitcoin allocation right now.
Maybe you can do an ETP of different preferred products, actually.
Yeah.
Because actually that would work, because in most European jurisdictions, the coupon is less tax advantageous than it is in the US. So if you had as a capital appreciation product, it could be quite interesting.
Yeah, when it comes to Europe, it's always about fragmentation. So obviously there are different tax regulations in the different countries. But yeah, it's something that might work.
Okay, we've got 1 minute left. So we'll go across the panel. Sam, I'm going to go to you last. With Bitcoin predictions for the end of the year, just to get a sort of a sentiment test for, you guys speaking to big allocators all day long. Sentiment test. Where do you see Bitcoin end of the year, Leopoldo?
Pricing-wise?
Yeah.
I'll say 160.
Okay, so we're breaking new all-time highs. Guillaume?
Yeah, we are breaking all-time high also, and I think more on the 200.
Flavio?
Pretty similar to them, actually. I would say between 140 and 150K.
Okay. Bullish sentiment all across the board here. I'm not sure how bullish that actually is when everybody's a bull. Sam? What?
So we don't do price predictions, and the reason for that is that it doesn't really matter for our clients. They've got to go through the process, take the right decision, and then, depending where the price is at that point in time, then we'll figure out, if they choose to allocate, how they implement that decision. And there's obviously lots of different ways of doing that in practice.
How about you, Sam Roberts, as an individual?
Oh, I don't have any opinions, you know that.
All right, thanks everybody. Thanks for the great panel.
Thank you.